All right, ladies and gentlemen, we're back one more time. Okay, so the next strategy we're going to be discussing is the bouncing of strategy. Usually we use trend lines, so it's also sometimes referred to as a trend line strategy. All right, so let's get onto the MetaTrader 4 chart, and then let me show you how the strategy works. All right. Okay, so here we are on the MetaTrader 4 chart. Um, Now, with this strategy, what you do is before you can draw the trend line, you have to, um, how do I put it? Decide on which one is the, I mean, you have to locate the lowest price for that particular period. If it is um, that if you want to make a call entry, you have to locate the lowest price. If you want to make a put entry, you have to locate the highest price. So to um, to make a put entry with this particular one, what we are going to do is with this particular range of prices between this point and this particular point, this is the lowest price. All right. So meaning our trend line is going to start from here. Okay. So now what we do is that once we locate our lowest price, we then use this. This is our trend line. All right. We click on this, then we click here and then try to drive it to the next available line, which is the next available lowest line. Okay, in this case, we even have a lowest line here. The next available lowest line in this, not this, alright, but the next available lowest line in this uptrend is this one. So at least you should get 2 points. You should get at least 2 points, alright. So in this case, we got this point and we got this point. So at least have 2 points for our this indicates that we are expecting an uptrend. So meaning we're gonna just go in this case, if we locate this, we put our trend line here, we start here, and then we locate this point. Are you okay? We good? So we take it here and then we wait for the market to move. So as you can see, the market moves, and as the market moves along this line, it moves until it goes here. We're expecting it to bounce off it, but it didn't bounce off it. You can realize it broke through it, right? So you're not going to take a trade if it breaks through it. You're just going to wait. But if you would notice that at this point it bounced off it. So once you notice it didn't break through and it bounced off it, immediately it closes, you take a trade. Are we good? Do you get what I'm trying to say? With this strategy, first of all, you locate the lowest point, then you try to connect it to another lower point on the uptrend that is beginning to form. Alright? So in this case, we look at this lowest point, we look at the next lower point on the expected uptrend. Now, provided we have 2 points, that is enough for our line. So we wait for the price to move, and when the price bounces off our line, because this is acting like a support, because we realize that at this point the price of the asset price couldn't move below it. At this point, we realize that the asset price again couldn't move below it, and that it moved above it. As you can see, it moved across, it bounced off it, it moved above it. So we wait for another bounce up before we take our trade. So now we realize that with this particular kind of thing, it didn't bounce off it, it broke through it, but it didn't close below it. So therefore there wasn't a breakout. Are we good? So we leave it this way. Are you okay? So you don't take a trade. But with the next one, it bounced off it. This is this one. It bounced off it. So one is implies, and then once it bounces off it, when it closes, which is here, at this price, you take a trade. Remember, there's an indication the price is going to go up. So if you take a trade, any of the prices from this point that is above this particular price should win the trade. Are we good? Should win the trade. Any price that is above this particular price, that is above 1.097929 should win the trade. Alright, so that is how this strategy works when using when trying to use a call for the strategy. You draw it from below if you are expecting the market to go up. Alright, you draw it from below. Now if you expect the market to go down, which is the put, we move to this point, you wait for a downward trend. This is an upward trend. This trend was an upward trend. You wait for downward trend. So in this case, you look for the highest point. Now you realize that within this particular price range, from this particular time frame, for the kind of from this point to this point, the highest time frame was this. The highest time frame was this one, right? So what we do is we will then get our trend line. This is our trend line. We will click here, and then we look for the next highest point. Now the next highest point will be this one. This is our next highest point. Will be this one, right? So now what this implies is that when there is a bouncing off, what is implied that when there's a bouncing off it, right, you expect the market to drop. Okay, so in this case, what you will notice is that let me see. Alright, so in this case, what you will notice is that it bounced off at this point. So we are going to look for the next bouncing off, and I think we cannot find one here. We cannot find one here for this one. So let's keep going, and let me look for one for us to use. For example, a minute. Let me get it, and then let's use that for example. I want us to show you to have a fair idea of what he's talking about. A minute. Alright, let me pause this video and then get one for us. Alright. Alright, sorry about that, but I managed to find one for this video. Okay, alright, so now let's continue from where we left off. Now, between this price range, this candlestick, and this period, alright, the highest point is this. Okay, so what you do is you choose the highest point, which is this, and then you look for the next highest point. So from this point to this point, this was the next highest point. So let me show you how I do it. Let me show you how I do it. So this is a trend line. Alright, this is the highest point. I take it this way, and then the next highest point I connected it to this point. Good. So now, what you will notice is that let me try. Okay, we're good. Now, what you will notice is that from this point, it bounced off at this point. Further again, we're not going to take a trade, but we've now been able to locate 2 points, point 1, point 2. Are we good? Now we wait for the third bouncing up. That's why we take our trade. The third bouncing up is where we take our trade. Now, you can saw the third bouncing up took place here. Now, it bounced off at this point. You can realize that this candlestick tried to break through, but it couldn't break through. It ended up touching it and then bouncing off it and closing below. So once this candlestick closes, remember that if we draw the trend line from the top, it indicates that we're going to use a put strategy. We are indicating the market is going to fall. This is going to be a downtrend. This is a downtrend. Indicating that it's going to be a downtrend, the price is going to fall. So therefore, once we got our 2 points, this point and that point, and likely for us, then the next bounce off took place immediately after this bouncing off. So once it bounces off here and it closes, then it's going to close here. It's going to close at this price. Alright, this price. So once it closes, anything below this price is going to win. Any price below 1.14454, they're going to win the trade. Alright, so for this strategy as well, it gives you an indication of the future direction. If you draw from the top, it means it's facing a downward trend, which means that you're going to take a put as a direction, which indicates that any price below our entry price, we will win. As in this case, any price below this price, we will win the trade. Alright, in the case of our upward trend, that is where you look for an upper one, which we did earlier. We did that earlier. I think I might have lost it. If you are looking for an upward trend, for instance, this is an upward trend, an upward expected trend, an upward expected trend. So anything from this point all the way up, you're expecting that the price should go up. Alright, in this case, let me see if I can get some points. For instance, we can get this point, and okay, alright, we can get some points like, and get some points like this one. Alright, so this was, so we got point 1, we have point 2 for upward trend. So we wait for the next possible bouncing up. Let's just take place here. Yeah, it took place here. So we got a next bouncing up, which took place here. Alright, so now this indicates that any price above this one, because it closed here, any price above 1.13017, we are going to win the trade. So if we hold the trade for this amount of minutes, any minute or hours above this, we can win the trade. So provided it's above this and time frame is right, we are going to win the trade. Are we good? So this is how the bouncing of strategy works. I know it's been a little bit sketchy because I had to now go locate a trend and then show you how the strategy works. But I hope you got a clear idea of it. If it is a call you want to take, then you should be doing on unexpected upward trend. That's a call, unexpected upward trend. So therefore, the trend line must begin from the lowest point, look for a second point, and then you take a trade upon the third bouncing up. Alright, that's it. And if you want a downward trend, you have to do how do you call it, a put. You want to take a put. You have to look for a downward trend. You look for the highest point. This is the lowest point. That's for the put. Look for the highest point for the call. Sorry. For the put, you look for the highest point. Then you create another higher point. Then you look for the third bouncing up. When the third bouncing up occurs, you choose the put. And then you hold the trade for a particular time frame that you have backtest for again. Again, I don't trade with this strategy like I did in the previous video. So I don't know the time frame. So best, the time frame best to hold an asset for this strategy. So you have to backtest it as well. And all you just have to know is look for 2 points, the lowest point, the next lower point. If you want to make a call, if you want to make a put, look for the highest point and the next higher point to make a put. And that's how it works. Alright. I hope you got it, and if you have any questions, let me know below. I know this video was a bit sketchy, but I just hope you got an idea behind it. Alright, so you let me know whatever you're thinking, and then I will help you resolve. Alright, thank you very much.